If you've been following us for long enough, you will know that we love trading Nasdaq, right? Besides trading VIX 75, NAS 100 is the only pair that we actually trade. As the saying goes, it's better to be a master of one thing than to be a jack of all trades. So we have mastered NAS 100 and we are going to tell you exactly what you need to understand and know about NAS 100 so you can be able to trade the way we trade and kill Nasdaq every single day, right? So starting off with what is Nasdaq. So let's just give you a quick explanation of what exactly is NAS 100, right? So the Nasdaq 100 index is a basket of the largest, most actively traded US companies which are listed on the Nasdaq stock exchange, right? So this index includes companies from various industries except those from the financial industry like commercial and investment banks, right? So those are not included. This index basically includes companies that are under non-financial sectors, which includes the retail industry, you know, like the likes of Amazon, which is the biggest in the retail industry, biotechnology companies, industrial sector, we have the technology companies, the healthcare companies, and many other companies like that that have nothing to do with the financial industries, like commercial and investment banks, right? So some of these big companies, of course, will be the Amazon, as we said, Apple, Facebook, and all those big companies, right? Like Google as well, which are some of the most influential in this Nasdaq index. So Nasdaq is an index that has gotten more expensive to trade over the years, right? So even if you use 0.01, you can still blow your small account trading with just one position open. That's how powerful and dangerous Nasdaq is. But on the good side also, that gives us an opportunity to make a lot of money out of trading this index. So first of all, you have to understand that we've been trading Nasdaq since 2018 using the same strategy, right, that you are learning right here, right? So we've tested this strategy. It's been working for us and it's still working and will always be working because this is how the big boss trade. So all you have to do is just to follow what I've been teaching you in this course and what we're about to explain in this phase as well, so that you can understand and trade the Nasdaq the way we do trade it as well. So back then in 2018, when Nasdaq was still around 6,000 in terms of its value, right now it's about 15,000 and above. So we're basically like 2x the price that it was at that time. Small accounts like $100 still stood a chance back then. But now at this level that is running at, which is at about 15,000, it's a challenge to make it with small accounts like $100 accounts. This is due to leverage and the increased volatility and the price of the Nasdaq. I mean, it's now worth 2 times what it was worth back then in 2018. You also need to know that with Nasdaq, there are a lot of pullbacks and always stop hands that occur on this market. It is not easy for a small $100 account to handle those drawdowns before seeing the market going in your direction. So this stop hands will probably blow your account, especially if you're not adhering to the risk management rules. You easily blow that $100 account before the market moves in your direction. Even though now these days we have brokers that are less volatile and they allow you to trade Nasdaq with at least $100 stress-free. But unfortunately, those brokers, they will pay you pocket change, right? You don't really make much money out of that trade when you're using these brokers. And you know that we are here for the money, right? So we cannot be wasting time with such brokers. We don't have the long-term patience when it comes to trading Nasdaq. Now here on your screen, you can see some of the examples of W formation that we caught at the demand zones back in 2018 using the same strategy that you're learning in this course, right? So this is the demand zones W formation caught over there. As you can see, we caught some nice moves over there, make some good money on it. Now a quick tip for you when it comes to trading Nasdaq. If you want to be safe when trading Nasdaq with less emotions attached to it, you need to have at least a minimum of $1,000 in your account going upwards, no less than $1,000. This amount is a lot for most traders, but it is advisable to rather save up your $100 until it gets to $1,000 than to start with those small amounts and just keep on blowing them anyway. Better to have patience to save those $100 until you get to 1,000. You fund your account and then you have less emotions attached, and that will allow you to even make smarter decisions than when you have those small $100 accounts, right? So $1,000 account is better at handling those drawdowns that we spoke of that usually occur before the market goes in your direction. With such decent amounts in your trading account, you can trade Nasdaq without a stop loss using a small lot size, which gives your account some room to breathe. So it's not like when you fund with $1,000, then you're going to 10x your lot size that you're using before. No, you still stick to your risk management, risking 1 to 2% as we taught you in the previous lessons. And remember when we said if risking 1 to 2% is too little for you, then your account is probably too little or too small. You should probably think of adding more funds to your account, right? So as you can see in this case, with $1,000 account, that means for every trade you're risking 1%, which is about $10, to make at least $20, $30 on a 1:2 or 3 risk to reward ratio. And now these examples that you're seeing on your screen is when we caught an M formation on the second leg of the day. As you can see here, we use no stop loss as Nasdaq will kick us out before moving in our direction. So we are always cautious of that movement. As we say, this comes with experience and just knowing how well your account can actually hold those drawdowns. So that is why we suggested a decent account so that your trades can have some room to breathe whilst the fear won't be too much on your side as well, which might force you to enter your trades based on analysis and then forcing you to exit based on emotions, and which is what most traders do. They literally open trades based on analysis and close them based on emotions. I mean, it makes sense to have a drawdown of $50 on a $1,000 account than to have a loss of $50 on a $100 account. I mean, the emotions there, you can see it's easier to handle the emotions on a $1,000 account than to handle it on a $100 account, because that is about 50% of your account already gone, whereas there it'll be just about 5%, right? So it just makes more sense and less emotions attached when you have a big account to trade Nasdaq. Now, we are not saying Nasdaq buy all the time, but as you can see, Nasdaq's overall trend is always bullish, right? It's mostly bullish. I mean, look at this, from 6,000 to now 15,000 and still going up. So basically we can conclude that Nasdaq is mostly on a bullish trend more than the bearish movement. This is why you will see us buy Nasdaq more often than we sell. After every drop, we always wait for a pullback to catch the retracement, because we know Nasdaq will have that retracement to recover. But just like any other strategy out there, it is not possible to catch it all the time. Sometimes it will continue down and not actually recover with that retracement, but majority of the time we will ride that retracement all the way back to where it started the drop, and even sometimes it will pass through that, break that resistance, carry on going to the upside. Keep in mind that to be a profitable trader, your winners should always be more than your losses. That is how we survive in this industry. Let's hop on into the next lesson, where we are going to cover some of the most influential companies under the Nasdaq index. Let's get straight into it.